What is up, guys, and welcome back to yet another YouTube channel. Today we're looking at the strategy we use to execute our trades on Nasdaq and gold, right? Um, so without wasting any time, let's get into the video. All right, here we are, right? With our strategy, I'm using the strategy I learned from Falcon Forex. Is um, so what's happening is we're looking for structure. We're checking our structure, see what structure is telling us, look at the nature of the market, and see what the nature is also telling us, right? I'm used to this strategy, so at times I don't put exactly everything out of put, but then because I already see something without even like having to have the trend lines running. So I had this trend line here. Um, there's also like I had this, but then of course I removed because I could see already what's happening. So I'm using the most recent touches to like see what the pattern formation and what our price is trying to tell us, right? So here I've got a running channel. It's a descending channel. And a descending channel is a reversal type of formation. Normally we have first touch, second touch, and then we get another third touch, right? So we look to get three touches, but then it's not always the case. At times we may have first, second, and then create an arc formation or a double bottom and then reverses back to the upside, right? Um, but judging from what we see here on Nasdaq, we reached this point, we're corrective over here. So the chances of us reversing and coming either here to create an arc type of formation or down here to have a third touch are very high, right? Um, let's go down to the what to the lower time frame. So with this strategy, we normally start from a high time frame called bottom down analysis. Um, either weekly, daily, those are high time frames, right? And then we have a low time frame of 4 hour, of 1 hour, and 15 minutes. 15 minutes mostly. We're gonna use it for entries, for to get our entry points, because yeah, it's used for entry points mostly. So on our 4 hour, right, now we can see price action much clearer. Reason why I removed this trend line is because I saw it's called um evolving with the markets, right? I saw that we're creating another channel to the upside, right? Now having an ascending channel. First, second, I'm expecting a third touch right here. First, second, if price reverses, yes, I expect a third touch. Then I expect price to break out and do the 90% retracement, right, of this ascending channel, right? Um, so this is what we have here. I'm trying to be very careful here because price may reverse again and come touch here before it goes all the way back up. Or price may, since it's been an impulse right here, may correct, then impulse again all the way to the top. So we just have to be very careful whatever decisions we make, right? But here we're at a key point, key area. This is a resistant area, and price has been rejecting this area. So I'm not sure if it's gonna impulse up or impulse down, but I'm not in a rush, right? You have to let the market play out and create something that you're 100% sure of so that you're able to capitalize in a profitable way and not lose your investment, right? Now, we're going to the 1 hour time frame. I like using the 1 hour time frame. I feel like it gives me a clearer picture of what's happening in the moment as long as I know what to expect from the high time frame. Like in the high time frame, I know I'm in a key uh, resistant trend line. Now I know that I'm looking for reversal type formation, reversal patterns. Pattern formations normally happen in this time frame. So yeah, we need to like really utilize it in order to be profitable traders. Now let's see. As you can see, price hit here. It's been playing around, trickled all the way down. Now it's going up and it's here again. You can say this is an archetype formation. Someone may expect price to impulse down, correct, impulse down, correct, all the way to this supporting trend line here, right? So here price hasn't committed to the downside, it hasn't committed to the upside. So that's in my point of view, that's how I feel. Other traders may see it differently, but then I would rather wait for price to either impulse down and then form a certain type of correction, something like this. So I'd expect a correction right here, impulse, correction, and then I'll look to enter at this place, right? Let me show you how I place my entry. My entry will be somewhere down here with my stop at the top there and my target being the supporting trend line. The risk to reward is 4.6 or even greater, right? So I feel like it's a very, even if I don't take it from here, down here, it's still a profitable trade from my point of view, right? Um, Alternatively, if price impulses to the upside, if it doesn't stop there, if it goes impulse and breaks out here, would expect price to correct in such a manner, would expect price to correct right here, and then our target again will be the top that side. So my entry will go like this: correction, correction, entry type of formation, yeah, stop right there, the target at the top. Um, this trade is alright, but then the risk to reward is very low, right? Unless if in the 15-minute time frame you could be able to have a risk entry somewhere here. In that case, you can take the entry. But from the top there, the risk to reward is not as appealing. We normally try to capitalize on trades whereby we get a 1:3 risk to reward ratio. So yeah, that's my anticipation of how Nasdaq is going to play out, and this is a strategy I use. The strategy uses the concept of probable and possible. So we know that probably price is going to reverse and come all the way down, but it's also possible that price continues all to the upside, right, all the way to have a third touch right there. So at this place, this point of third touch, I'll be looking for something like this. That's the reason why I'm patient, because I know that these key areas, right, have good entry points. I'll be looking for something like this, right? An ascending type of formation that indicates a reversal in price, a change in direction, right? It might be like this, but then it can be well defined. But it also may be just something simple as this. From this point, I know I'll place my entries right here, right? If I have this, I'll go all in because I know it's a key resistant, a resistant trend line, ascending channel, and viral fade. That's already three things confirming that price is going to reverse. Three things that show that this is a base of high probability of price reversing back to the downside, right? So I look forward to capitalizing here. Same way I look forward to capitalize here, right? I know key resistant, ascending channel, and then I know there's a bigger resisting channel moving something like this from the top. Okay, let me just check for it. No, object tree. see where is that. All right, let me just track this down. Yes, here's the trend that I'm talking about. So I knew that this was a key area. This it just broke out, but then it broke out correctively. So I was looking forward to the price coming all the way down again. Let me hide it so that it's much clearer. So I knew that this is a key area. So I had my trend line somewhere here, uh, running like this, right? Then I knew my entry is right below here. My stop is on top of this red one because I knew it's it might come and touch this point and reverse, right? And I was looking to capitalize on the move, on of which it did play out, came here, but then it reversed. So I'm letting the price play out and create something that I understand again, so may be able to capitalize. But hopefully, if price goes up, this is how it's gonna play out. If price goes down, then you're just gonna capitalize on reversal at this point, right? That's basically it. If you find this video informative, please hit the subscribe button to get more informative videos. Hit the post notification and don't forget to give us a thumbs up. We really appreciate it. Leave a comment down in the comment section and we'll meet again next week for yet another YouTube video. Um, Thank you so much.